The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
You might think cereal and oil is an unlikely combination. Maybe not so much, though, when it comes to growth and income stocks, as the editor of our Income Investor, Ryan McQueenie, is going to tell us right now.
Yeah, I wouldn't recommend using oil as your milk substitute in the cereal. That's not a good combination. But yeah, you're right. Two stocks we hold in the Income Investor portfolio right now. Two stocks that we are in the red on in the Income Investor portfolio. Not hiding from my losses here. We've of course, along with everybody here in stocks, been having a rough couple months. And
but the bright spot in General Mills, didn't they have a recent up move?
And that's exactly what we're going to be talking about today. And it was an up move, a pretty dramatic gap higher on an earnings report, a little bit more dramatic of a move higher than I'm used to seeing with these consumer staple stocks. So I wanted to talk about it. Earnings per share of 85 cents in the most recent quarter. That was up 3.6% year over year. Beat the Zacks consensus estimate by 4 cents. Total revenue up 5% to $4.4 billion. That was mostly that revenue growth thanks to an acquisition of high-end pet food company Blue Buffalo. I don't know if you've heard of it. I have
heard of them.
So that's kind of an interesting point right there. The earnings growth, a lot of that's from the tax cuts, still seeing the effects of that. And the revenue growth, that's kind of how you have to get growth if you're a massive consumer staples company like this. You know, your core business, the cereal, it's not driving a ton of sales growth these days. So you have to go out and you have to spend cash on companies like Blue Buffalo and really flex out your pet food segment, for example. All said, though, the most important thing here when we're talking about an earnings beat, what was the guidance? Reiterated guidance for fiscal 2019, and then expects organic sales growth. So that would be not including growth just coming from the acquisition. Organic sales growth to be either flat to up 1%. So still just ever so slightly a little bit of growth there in the core business as well. And as you noted, a move higher. This is the 5-day look for General Mills. As we can see, a big gap higher. I think it eventually ended up closing the day around 4.5%, 5% higher. Got pulled back along with the rest of the market after the Fed's decision. As we can see, though, already kind of pulling back from that this morning. We've found a bottom on the intraday chart, and we'll see what General Mills can do from there. It's been not the greatest year for the stock. Obviously, though, this is a relatively defensive play, a pretty stable type of stock that you would camp out in periods of volatility, and you're getting a 5.1% dividend yield on it right now as well. So that makes me think, with a lot of question marks in certain industries and question marks over the market as a whole, General Mills, after a good earnings report, might see some renewed interest from investors.
And just to clarify, that up move in the stock came on December the 19th.
Yes, that would be yesterday,
right,
if you're watching this video the day that it's uploaded.
That's right. All right. Now that we got that out of the way, let's talk Chevron.
Yeah, so we're talking Chevron in the context of what was a pretty dramatic crash in the price of oil earlier this week. Yeah. It happened on Tuesday, which would have been, what is that? The 16th, something like that? 17th? There we go. Yeah. So earnings per share, maybe even the 18th. Maybe. So oil crashed on Tuesday to its lowest level since August of last year, August of 2017. 7% drop on the day in the U.S. crude benchmark, the West Texas Intermediate, closed at $46.24. That's, obviously significantly below that $50 a barrel, which is a key kind of, if anything, a mental threshold, if you will. But now we're also bordering right on that area where the domestic producers are kind of scrambling for profitability. So we're right there in the face of that. That's obviously something, if you follow the U.S. shale oil business, something that was a big question mark early 2016, late 2015, as the oil markets were flooded with supply in an attempt to kind of drown the U.S. shale producers out. They survived that. There's a lot of hope that this wouldn't cause problems because we have proof that it can survive at these levels for an extended period of time. But we've got some serious questions about supply and demand elements going on in oil right now. Russia's crude output hit a record 11.4 million barrels a day in the most recent month. We've also seen a lot of production in the United States continuing to ramp up. We've got questions about whether OPEC's going to be able to get its production cuts that were agreed upon done, kind of a soft cut agreement at the most recent OPEC meeting. And then if you start to think about, that's the supply side of it. If there's an oversupply, we might also have questions about the demand side, which might say some things about some of these other global economic slowdowns we're talking about as well. Here is a look at the West Texas Intermediate over the past year. As I said, we've plunged to the lowest levels since August 2017. So on a one-year chart, we're hanging out here right at the 52-week low. Definitely since reaching this peak in like early October, it has been a brutal couple months for oil. And with that, you're going to see some revisions for the oil giants. Let's take a look at Chevron's earnings estimates trend. As we can see, within the last 30 days, significant cuts to its 2018 earnings and 2019 earnings estimates. Still looking for growth here for 2018, as it's been able to cash in on higher prices earlier in the year, but that growth might be a little bit more difficult to come by next year. That being said, when we talk about the pressure that's on the U.S. shale oil business, a multinational behemoth like Chevron should be able to get through that a little bit easier. They will be able to get through that a little bit easier. We've got exposure to different areas of the energy market and just their scale protecting them a little bit. With a 4.2% yield, I can see that this might be a place where some of the energy money would hang out for a while as these question marks kind of take some time to play out.
All right. Do you own either one?
We have both in the income investor portfolio service right now.
All right, but not you. Okay. Thanks for all of that. And don't forget, you can check out more stock information on Zacks.com. That's our website, also on the podcast page of Zacks.com. Don't forget to check out Ryan's podcast, Tech Talk Tuesday, if you want more information on the tech sector. A lot of interesting stuff going on with his podcast, including guests, and his free lunch streaming video show, Monday through Friday, live on most major video download platforms. With Ryan, I'm Terry Ruffalo.